Welcome back. You're watching The Money Show, and it's time to get your portfolio queries answered. And just before I invite our special guest who will be looking into your financial portfolio queries, let's just flash our WhatsApp number and email ID where you can send across your questions. Give us all details of your financial portfolio and also the financial goal that you want us to help you accomplish with a particular investment strategy. So we will get it answered by our experts live on the show. Okay, let's begin. And I have with me Shweta Jain, who will be answering all your portfolio queries today. Shweta, hi, good evening. Welcome to the show. And okay, so Shweta, I have a lot of questions for you, and let's begin. I don't think I have the viewer on the call, but then it's Akshay Khaire who has sent his question to us. He's 32 years old. Current portfolio value, he says, is 3 lakhs, and his goal is 5 CR after 20 years. And he's doing 10,000 monthly SIP and plans to step it up by 14% yearly. So he's given a multi-cap box. I don't know what exactly that means, but it's 1,500. Then he's talking about Parag Parikh Flexi Cap 4,000, Tata Small Cap 2,000, and Motilal Oswal Mid Cap 2,500. So his question is, are these goals, are these fund selection aligned with his financial goals? Okay, so in terms of diversification, he looks good. What will you recommend?
Hi, Kavita. Thanks for having me on the show. So Mr. Akshay is on the right track. Usually we tell people that, don't think too much about if it's a small start. Just start. Starting is important, and which he has got. He's got a good goal as well, 5 crores in 20 years plus. His accumulation is 3 lakhs so far, so that's not bad. The portfolio looks good. Don't know what a multi-cap box means either, so we're going to leave that. But the portfolio looks good, and these are aligned to his goals because these are it's a good mix. These are equity. He will need to increase his SIP to about 50,000 to meet his goals, but he's on the right track.
All right, now since he's talking about stepping it up, Shweta, by 14%, I also wanted to understand, will he have to add a new fund in his portfolio, or just increasing the amount in the existing funds would be enough?
See, initially he may not need to add another scheme. He could just add on to one of the schemes which has a lower allocation or which he wants to increase to. But I could see a case for passive fund to be added here as well. So that could be a new scheme that he adds, maybe not this next year, but the year after that when he increases to say about 3,000 rupees extra. So then is when he can add.
All right. Looking at his age, he's just 32 years old, and so far he's not given us any specific goal, apart from the time horizon of 20 years and a corpus of 5 CR. I'm not sure the kind of life stage he's into, but then what happens is a lot of time people try, the situation demands, the life demands that you have new financial goals or different financial goals. What you had planned, not necessarily it has to go in that way. So now if that happens, if there is any deviation in terms of his financial goal, would you recommend him to have the same kind of portfolio, or you would want him to invest separately, since this is more like a retirement portfolio that he's investing into? How can one dip into the existing investment portfolio for new financial goals, or one needs to have a different strategy altogether?
Yeah, I think that's a great question, Kavita, because a lot of investors compartmentalize their portfolios or savings. So for example, he could have more mutual funds or stocks set up for some other goal, and this could only be his retirement goal. Having said that, if this is his only portfolio and say tomorrow he wants to buy a house or he needs to withdraw funds for his child's education and things like that, he could remove part of the portfolio in two ways. One, which has been longer term, so tax implications are lower, or cut down on the non-performing scheme, so he's sort of cleaning up his portfolio. Or the other way is to actually plan the portfolio in a way that aligns towards not just the retirement goals, but also the shorter term goals. Like for example, now if he has only 10,000 monthly, but he has other goals as well. Say 2,000 is set aside for a shorter term or a medium term goal. So it could be a liquid fund, debt fund, or a hybrid fund, depending on when it is due. So it various ways of doing this depending on individuals.
All right, so that's the solution coming up for Akshay. But then let's move on and let's take Venkatramaya's question. He is an IFS officer retired from Hyderabad. He's 67 years old. And he wants to know whether he should be investing in a multi-asset fund or balanced advantage fund. Now, the choices that he's asked you is between ICICI multi-asset, Shweta, or SBI Balanced Advantage Fund to park his retirement corpus of 1 CR. Now, which is better? Very interesting, and I think hybrid category is a go-to category for a lot of investors. And looking at Mr. Venkatramaya's age group also, you know, he wants to park in his retirement corpus. I think he won't be able to take much risk, you know, with him. I don't have him on the phone line, so I'm not sure about what is the risk profiling over there. But having said that, both are great tools of diversification in different asset classes, whether a balanced advantage category or a multi-asset category. What will you recommend and why?
So I don't think it's a question of which of the two, really, because it's not like he can put all of his assets in one particular scheme. If this is his entire portfolio, this amount is what he wants to build with, he will need to diversify much more than just these two schemes. Also, these two schemes he can't really compare because these two are quite different in nature, including assets, some of that at least for that matter. But their purpose is different. So one is to diversify across multiple assets. One is to make sure that your portfolio is more balanced with hybrid, so debt and just equity. And they could actually be in similar directions at some point or different directions depending on each of the fund managers' view, with no control of the investor. So I would actually have a different view to this. Say 1 crore is his target portfolio. If he's looking at a regular income from this, then the purpose is different. He has to invest a little more in debt, pure debt, I would say, and then a little in hybrid, and then even some in equity because he has to address both current requirements and future requirements, so growth for that matter. So I would say he needs a combination of all of this. ICICI multi-cap, multi-asset, SBI Balance, because these are the two schemes he mentioned. These are both good schemes. I would also say choose a debt a fund, which is short-term in nature if he has immediate cash flow requirements, and a long-term equity fund. So something like a large cap fund or even a flexi cap fund if he's not comfortable with just one type of asset class. So it has to be a combination, I would feel, and not just one either or of these schemes.